Hello and a warm welcome to Personal Finance. I'm Gugulethu Cele. With only 6% of South Africans being properly prepared for retirement, there is unfortunately a general decline towards financial distress in retirement. Today I'm joined by Discovery Certified Financial Planner, Neels Du Toit. Good to have you with us as always, Neels, and thanks for making time to join us.
Hi, Gugu.
Perhaps let's just get a quick refresher on the actual numbers and stats and figures when it comes to retirement in South Africa. We know that we're very poor savers and that there's a small group in the South African population that can actually afford to retire comfortably. Is this still the case given the changing dynamics?
Look, I think it's just becoming worse and worse, unfortunately, Gugu. If you have a look at the saving statistics of South Africa, we're actually one of the worst savers out there in the world.
Sure.
And that contributes towards the retirement planning side. I think it's also a matter of fact of affordability and making sure in terms of knowing what vehicles you actually invest into. But hopefully with innovative products out there and legislation coming to its part where actually guys are being motivated to invest a little bit more, hopefully the statistics will change in the near future.
Let's certainly hope so, but I understand that there are two major issues that are playing into the dynamics, of retirement saving in the country, such as longevity as well as persistency. Explain these to us a little bit more.
Yeah, of course. I mean, if you have a look at the longevity factor, it's a fact that research has actually shown that people tend to live longer nowadays. You know, we've got the good medication out there, good medical technology. So that is a worry. I think a very important point there is that you must start early. To make sure that you actually have got that term on your side.
So 25 is still considered the minimum, or even earlier if you can?
Yeah, if you have a look at the average degree out there in terms of the guys that's going and study further, that's 3 years. So as soon as you enter your employment area, you need to take that advantage and say, listen, let's just start, even if it's just with a minimum premium in the market, just to get that first step going. And then, of course, budgeting and making sure your affordability and making use of your tax deductions, which is there.
Exactly. When it comes to persistency, though, I understand that this has something to do with your assets and how you invest them into the market. How does it work? Yeah,
of course. I think if you have a look at persistency, I think a thing that's quite important there is risk profile, having a look at your asset exposure. And also the way that you structure your products. I mean, if you have a look at, from a Discovery point of view, just structuring your portfolios correctly, there's some extra enhancements at retirement, but it's quite important to understand the product. Managing health is important thing, but managing your health will cause that longevity factor. I mean, who doesn't want to live long and enjoy your time with the loved ones? But that's where the products in the markets must be sustainable and basically sorting out that needs that you actually look for in the future.
So how do we get it right? You mentioned something so key and important, which is health, and I understand that can not only benefit you, when it comes to living slightly longer, but if we start living healthy lifestyles now, it could actually make the payments of our retirement savings a lot easier on our pockets.
Absolutely. If you have a look at medical expenses in general, we know it's quite high, but we understand why. I mean, medical inflation is probably one of the highest inflations out there. But I mean, if you actually maintain good health and exercise on a regular basis, that type of stuff, which is a commitment on your side, of course, that will reduce medical expenses in the future. You know, we all know diseases like diabetes, cholesterol, blood pressure. If you have a look at just chronic medicine in terms of what it will actually cost you in terms of month-to-month basis, of course, you can rather use that savings of possible medicines and then basically put it into savings vehicles. And again, you know, if you have a look at the Discovery offer that's in the market, you can actually say, but listen, by maintaining and good health, you can actually get the benefit of that extra income at retirement, which is absolutely important. I mean, any extra retirement income is an absolute bonus due to the fact that we know that statistics is quite shocking.
Exactly. Having said that, though, we do know that consumers are under significant amount of pressures. It's the rising interest rates, it's rising inflation. Just the other day on the radio, I heard that potatoes had gone up by more than 100% since the beginning of the year. So quite clearly, we have to fork out a lot more just to live these days. how best then can we position ourselves to ride this wave and continue saving for our retirement without necessarily skimping on that particular element of our budgets?
Yeah, look, it's a known fact that it's getting more expensive out there. I think in general, average household will probably need to put out an additional 500 to 550 Rand per month based on the latest price increases, fuel increases, interest rates. So that makes it more difficult. But I think what you need to realize is making use of the correct vehicles and correct products in terms for retirement. That will actually cause on your own side to utilize the benefits that's in the market, like your tax deductibility in terms of your retirement annuity contribution or your retirement fund contributions, utilizing that tax benefit and then basically pumping that back onto your retirement products. Also, there's your new tax-free savings accounts, which a lot of people have not entered yet into. I mean, that is tax-free growth that is actually being put out there to motivate the people to actually go and invest more. And remember, that is then an additional funds that you can use going into retirement.
Exactly. Let's speak to those individuals who are stepping closer to retirement or are planning to retire in the next, let's say 2 years. How can they, if they are expected to live slightly longer, take advantage then of ensuring that their retirement savings and payout is quite consistent? I take it goes back firstly to that conversation with a financial advisor like yourselves, who will tell them, look, you've either got enough money to get by, or we might have to augment your salary here or make certain cutbacks there.
Yeah, I think, go and speak to the qualified person, do a full needs analysis in terms, if it's just from a retirement point of view, making sure that the ugly word inflation is being built into that analysis, because a lot of people forget that. And then, I mean, you need to have a picture to where you want to be. I mean, just imagine for all the people out there, if you need to be that retirement age tomorrow, you will need to have an amount in your head where you would be able to retire, and not worry and lie awake at night. And of course, entering that very, very important stage in your life, which is called retirement, you need to sit down and have a look at specific products. Understand the product that you're entering into. I believe that, I came across a lot of people, especially at retirement age, where they don't really understand what they're going to enter into in terms of product, or what they've basically been entered into already.
And are these like basics, like understanding what an annuity is, a living annuity and the likes?
Absolutely. Like a fixed life annuity and your living annuities, or on Discovery Certified Retirement, your linked income plans. And just once again from our side, I mean, coming back to maintaining good health, of course, the older you get, the more important the health is at the end of the day. And maintaining that good health, you can actually boost your retirement income by up to 50%.
Sure.
Just engaging in the Vitality product and getting rewarded for that.
Exactly. So it's about making use of the product scheme and understanding how they all interlink.
Absolutely.
But if we do throw forward to also understanding some of the changes in the regulatory landscape, I take it those who are below the age of 55 probably have to do a lot more rejigging and rebalancing when it comes to the outlook, because I do understand that there has been a pushback slightly on some of the regulations regarding annuitization, right, of retirements, but the element regarding the tax level that influences or impacts on wealthier individuals is still quite significant.
Yes, and I think once again, coming back to knowing what actually the benefits are when you're below the age of 55, for instance, and you've still got a term on your side, making you utilizing the 27.5 or up to 350,000 that has been changed now as from 1st of March, where you can actually deduct your retirement annuity contribution up to that percentage of your taxable income. A lot of people are still on the old benefit, and they actually haven't known that. So if you've got actually additional amount left to go and invest, and there's still that tax benefit, why not utilize the 27.5% and pushing that up, which at the end of the day can just benefit you.
Exactly. To close off with, before we do recap on some of the key takeaway points from our discussion, a key question we always get on social media is it worthwhile having an RA and a pension fund?
Look, absolutely. I think from a financial advice perspective, it's first important to determine in terms of how much you contribute towards your pension fund and retirement annuity fund, if that's going to be sufficient. And I can tell you now that basically I can even go as far as say 90% of the times people have not got sufficient funds in the future when they contribute that. So yes, depending on your needs and how much you do contribute, of course, what other type of investment vehicles you've got and other assets for retirement. Just go do the analysis, making sure that you structure your product correctly, and then basically determining if you're on par with your goal that you want to be.
Exactly. Well, we certainly said quite a bit, but let's get a quick recap now on some of the key takeaway themes from tonight's discussion. Neels, we've certainly said quite a bit, and you've given us a few highlights as well as to what to consider. But when it comes back to health and how it ties into retirement, what do we need to bear in mind?
Yes, absolutely. I think maintain good health, or promote to get to yourself to a point to get to good health. Of course, that will save you in the long run. Structure your product correctly, and you can even get further benefits from that. And then at the end of the day, understand the product, understand the benefits. Have a look at cost, and also don't throw away previous employers' fund that's maybe, or previous retirement annuities that's just lying there. Making sure that you can actually utilize that funds to the best possible way where it can actually benefit you for retirement age, and making sure you've got that plan and know what you want to have at retirement age in terms of an income, and try and achieve that, and be on that line, that bar, and making sure you reach your goal.
And preserve, preserve, preserve.
Absolutely. Where you can, it's important.
Exactly. Neels, thank you so much for your time today and for joining us, for your insights. But that's where we have to leave it today for Personal Finance tonight. A big thank you once more to Neels Du Toit, Discovery Certified Financial Planner, for joining us this evening. Now remember that we want to hear your feedback as well as your views, but you can tweet any of your thoughts, comments, as well as questions to @CNBC Africa using the hashtag Finance410, or to myself @Gugulethu. Until next time, have a wonderful evening.